Hello. We have often heard how the trend is your friend and that you should always trade in the direction of the trend. Today I'm going to demonstrate that that is not always the case, and quite often the trend is not your friend. In fact, most of the time the trend really is at best a fair weather friend. Now we've seen markets that look like you can clearly see the direction the market is going, or it's trending. This is true for higher time frame markets, but for lower time frame markets, this is not true. For example, in looking at this chart, 4-hour chart of EOS, you can clearly see a very distinct trend in this area. It's going down. The trend shows EOS is losing value. You can see it clearly and visibly, and you can see it over the course of 6 months. So it's rational to say that is the trend. But when looking at this market context with mathematics, that changes based upon the time frame. For example, here you could say the trend shows a short-term rise. And again, because of the 4-hour time frame, that could be considered true. But this really can't be considered a trend. This small little space right in this tiny range on the screen, the best that can be said is that momentum shows a downward shift, and then momentum shows an upward shift. But then we go back into a downwards trend after what looks to be overall a sideways trend. So trend and momentum are often very different, and they don't always go in the same directions. So let's actually get into the mathematics of defining a trend with one of the simplest approaches possible. Now, Jackrabbit makes that easy, so of course I'm going to use Jackrabbit because you can easily see it on the screen. So let's start with a very simple trend following technique for moving averages. This is a very simple trend following crossover approach that works very well and provides a very high rate of profitability in the right time frames and on the right assets. For example, let's look at the assets statistics and we'll see. Here it is for this time frame. This coin for purchasing long positions would make $752. Now that's one position at a time, 1% of the balance, and for the purposes of this time frame, I chose a $100,000 balance to demonstrate the process. Realistically, the higher the time frame, the more balance you're going to need to make it profitable. It doesn't make sense to spend half a year waiting for $30 or $40 of profit. You're going to want to look at the bigger picture with the consequences of risk versus reward. So for this particular long-term trend, our balance is $100,000. Our fees are 0.2%. Of course, if we change the fees, it's going to affect the profit. And we'll get into that in a little bit because that actually plays a part of defining what a trend is. So here we see $752, pure straight profit even with all of the chaos that the market has been through over the last 8 months. That's great. And this is the simplest trend following direction there is. Now, right now, this is long only positions, no shorts. So let's see what would happen if I changed the direction and I took into account short trades. And as you can see, the market isn't as favorable in a short direction for this asset. Now, a lot of traders would trade both long and short simultaneously. But for the purposes of what I wanted here, I wanted to demonstrate them separately so you could see the difference in market direction and just how important consumer sentiment is with respect to that market direction. If you take the stock market as an example of what the cryptocurrency market could become, 140 years of historic data has shown time and time again that the market trends upwards over time, even in a bearish market like what we've had. So it makes sense that a longer time frame wouldn't do well if you're trying to short the market versus trying to simply go in a long direction, since that is what the market wants to do naturally over time. It wants to make money. So from the standpoint of a simple, very easy approach, this is a money maker. You don't have to worry about holding a position because no matter what happens, one position is purchased, one position is sold, and it liquidates strictly on a 1-to-1 ratio. It is literally the best case strategy for dealing with the market. And over the long term with the right asset, as you can see, it can be very lucrative. So let's look at some of the statistics that this asset represents as we have them here on the side. Overall, it took a total of 26 trades in roughly 1,500 days. It won 17 of those trades and it lost 9 of those trades. The maximum that it purchased, which is of course wrong for statistics because it's seen a sell point as a buy point, but that's fine. It shows 2, but when you look at the chart, you see a 1-to-1 ratio. You're going to get some issues like that, and that's normal. Your average profit is minus 4%. That is important in understanding trend trading. Trend trading isn't about winning every trade. It's not even about winning half of the trades. It's about catching the big moves to compensate for all of the little losses that are commonly called whipsaw. And that really is the whole point and purpose of trend trading, to catch the big moves, to catch the big upward spikes. And as you can see from this chart here, every time a crossover took place, that's exactly what it did. It caught those big moves. Now, could you do better with this strategy? Yes, you can. But the goal here is to show the basic, simplest trend approach. And there are a dozen different trend approaches that can be used. There are a dozen different ways to maximize profitability. but I want simplicity. And this is the most simplest. For example, here is a huge approach, and it shows it. And you can even change and define different ratios appropriate. Okay, I just made a very slight change in the chart because I want to demonstrate this particular run, specifically with respect to the purpose of trend. Let's get it all into the screen. The opening position here starts right there, and it closes all the way up here. That is, it followed the upward trend. That is important because that is where profit lies. So by following the trend mechanics, you catch these big swings. And those big swings are what really make things work. Now, the one thing that needs to be emphasized with this kind of trading is that it can often be difficult to get the right settings. It requires patience, and it requires a very careful amount of setup to ensure that you have everything tuned just right. Even with this example, I've had to make absolutely sure that things were tuned right and had to make a few corrections with the settings so that I can make sure you see on the screen the best approaches of trend. So let's go up and actually start looking at the market on different assets. Okay, here we have the statistics for Polkadot. The last profit was minus 11%, but the average profit is 19% per trade. So for 4 winning trades, it made 19%. That's a huge deal. So you're not going to get away with easy trading in trend following. And it's difficult to really tune out the losses. That is one of the most critical points about following the trend that must be overstated. It can be extremely difficult to bleed out losses if you try to filter them without affecting your purchases. But as you can see, even with the losses, it still made $5,000 profit. That's what trend trading is about. These small back and forth trades that lose are what's called whipsaw. Those get bled out and away by the huge runs that are allowed to occur. And that is the whole point. Those huge runs make up the difference for the losses. Now, it's not an easy process by any means to sit there and watch your trading go up and down like a yo-yo when the market has gone through what we have done for the last 8 months. But it is a process that can be the easiest to maintain over the course of many years. This is one of the few approaches on the market that will simply allow you to continue to build and compound simply by letting the market do what the market does. You don't have to predict it. You don't have to follow it. You just have to let the algorithm do the work for you and leave it alone. Using the stock market, historically speaking, the likelihood of a good quality asset is always going to profit over the duration of year-over-year circumstances. You are going to have some months and maybe even a year that's a loss, but the long run of this kind of a trend following approach is always going to bring you profits in the end. Now, I just changed this market to show what would happen if you tried to short it. So even in a bearish run or a bearish trend, if you try to short the market, because the long-term trend is for the market to go up, you're going to short-term lose money. This is why the trend is not always your friend. The last 8 months, from November 14th until now, has had the market trending downwards. So all of the financial gurus out there and investment firms are saying this is a time to open shorts. Short sell whatever you're interested in to make money. If you're a long-term trader that is following the trend, that is the worst advice you can give somebody, because that is the results. $5,000 loss for shorting against the longer-term trend of the market, which wants to go up in value. So for this particular asset, you don't want to short it. Now, that's not necessarily true of every asset. This is a case-by-case situation that has to be looked at on the case of that asset. Some assets may very well do wonderful in this market. But again, trend following is the critical point. Long-term Bitcoin, everybody's favorite. Trend following long position in a short market, and it made money. This doesn't necessarily make sense. It only won 43% of its trades. In fact, it took 19 losses and only 11 wins. And yet it made money. How is that possible? How is it possible it lost more than it won and still came out with such a huge profit? Because the trend didn't work for you. The trend didn't point you in the right direction. That is the whole point of why you have to look at the trend in a realistic way. Sometimes it will be right, sometimes it will be wrong. The simplest method is just to let the algorithm flow with the market. The average profit here was 4%. The last loss was 9%. That's a pretty huge loss, and yet the profits, the actual analysis, speaks for itself. That you made money if you had followed this practice. Would you be a millionaire? I have no idea. Would you have survived the market over the last 1,500 days with this approach? Yes. And that is actually the whole point of it. The last 1,500 days of this analysis. See, we've only had a bear market for 8 months. So you figure 30 times 8, that's 240 days. That's only roughly 1/5 of the entire time frame of this analysis. And that is actually the whole point of what you need to take into account when you think about trend trading. How long is a bear market going to last? How long is a bull market going to last? There's actually no way of knowing either. So it becomes a situation of simply looking at the chart and seeing which way is going to outweigh the other. In fact, let's take a look at Bitcoin. Okay, let's actually see what would happen if we short this market. Short the last 1,500 days. Overall, we lose money if we shorted the last 1,500 days. Now, if you shorted from November 14th on, you would have made money. But unless you have a crystal ball, how would you have known that that would have been the start of the bearish downtrend? You wouldn't. Realistically, by the time December came by and prices were dropping, you could have set up a bearish approach like this one and caught that downtrend aggressively. But if you're looking for long-term market profitability, that's not necessarily going to be something you're going to worry about in the long term. The context of your trading needs to survive year in, year out. Trend trading is the most reliable and long-term trading process available. It needs very little maintenance because this kind of approach simply follows the market, no matter what happens to the market. That could be good or bad, and in reality, more often than not, it's good. Let's see what other coins we can find. Again, looking at the November 14th to now bear market, this asset brought in $13,000 of profit simply because of one single process, the trend of market theory, not the trend of the market itself. Last profit was 4.67%. The average profit, even through the bear cycle, is almost 7%. Out of 23 trades, it only won 10. It lost 13 trades, and yet it brought in a huge amount of profit. Trend trading is specific, not just to the approach you see on a screen, but it's a specific type of mindset that understands the market in the long term, that understands market dynamics, and that the propensity of the market as a whole wants to always increase in value. Even through its corrective stages, the natural market still wants to improve in quality of value. So when you're looking at your approaches, analysis is critical. Looking at the market structure is critical. Taking into account the time of your historical analysis. For example, a 4-hour time frame is going to represent a large number of days, a large amount of time. 1,500 days is roughly 5 years. 8 months for a bearish trend and a 5-year historical analysis is not going to show a big blip on the radar. Now, if you had 2.5 years of bearish activity and 2.5 years of bullish activity, then maybe the different approach would be valid. But for this case, it's not. Okay, here is another asset. It's still very profitable even in the short-term bear market. Short-term, of course, being relative to the total amount of time this asset has been trading. Let's see what it would look like if we try to short it. We have a loss. Not surprising. And the irony of this loss is that it won 55% of its trades. Think about that. The majority of its trades it won, but yet because of the size of those losses compared to the size of the winners, it lost a lot of money. So if you continually look at the market and its dynamic prospects, the trend is critical as a visual understanding, but it's not just the trend of the market that you're looking at on the screen. It's the trend of the market of the entirety of the time frame you are trading. And it gets deeper than that. Here's another example of a coin that over the course of the last 5 years has done very well. It's only won 7 trades. It's lost 13. So it's literally lost almost double the amount it's won. And yet, it has brought home $13,000 in profit. Same thing here, long term. Long-term thinking always wins over short-term thinking when you specifically want to trend follow the market. Path of least resistance. Here's another coin that has taken a lot of losses over time. It's only won 36% of the time, and yet, in the end, it still made money. Another one, same thing, not doing very well here, but still making money. Now here's one, a perfect example. It's not doing well at all. Long-term market for the last 5 years isn't good. So for this one, we definitely want to see, would it be better if we simply shorted the market? No, it wouldn't. It's actually worse. So even though this coin didn't have a good trend for the long term on a long position, it had a worse trend for the long term on a short position. It lost both ways. This is the perfect example of just how well the trend can deceive you. Now, will this coin recover over time? Maybe. Being down $90 for a 5-year run isn't a big problem. It's not going to be an earth-shattering situation to simply let it run another year or two to see how well it would be. But it's certainly indicative of the fact that this asset isn't very strong. Okay, here's one, profitable over the last 5 years. This is my favorite trash coin. I've talked about TRX countless amounts of times and why I like it and why I call it a trash coin. But this is a perfect example of just how resilient even something with very little value can be in terms of trading. It's available on any exchange, it represents a wide range of possibilities, and it still profited, despite the fact that over the course of its history, it has never been overtly strong. Another coin, rather newcomer compared to the rest, and yet it still made money. Long-term trend thinking over the course of 5 years versus simply the last 8 months. Still made money. In fact, it's doing very well. This one did exceptionally well, even had a couple of big runs. Even Ether. Ether is actually very healthy right now, despite literally hitting an all-time low. And yet it's healthy. The long-term 5-year period, it did well. And now we are back where we started, where we see EOS actually the loser of the market. And if we short it, long term, it shows that it's not profitable with the right settings. And again, that is the hard part of this kind of process. You have to really back test everything carefully to get those settings right. Okay, so now let's go find a coin that did jaw-dropping well. And for that, I think I'm going to use BNB. Spectacular. This is the kind of profits we want to see. This is really just outstanding. So now, we've got the perfect trend following recipe. I don't want to wait 5 years to trade this though. I want to have more aggressive profitability. So if the trend is my friend in the long term, that is, I got 5 years of history. Let's see what happens if I start going down. So I'm at the 4-hour time frame. Let's go down to the 2-hour time frame. Okay, I'm still making money. And it's taking me half the time that it did before. So now I should be at roughly 2.5 years of trading time. 3 years or somewhere in that range. Okay, so let's go down to 1 hour. Again, we're following the trend. Well, even the 1 hour, this is really nice. Look at that big, huge spike right in the middle. One big monster profit range. From roughly 101,000 to roughly 105,000 off of one trade. That's nice. That's great. But we're still not done. I want to get better. I want something that maybe might bring in some monthly profits on a reasonable level. So, we're down to 1 hour. Let's try 45 minutes. Okay, 45 minutes. Looking good. Let's see how roughly 3 years. That's still pretty far out. $3 years to get $4,000. Not bad, but that's 1.2 thousand, 1.3 thousand a year? Can we do better? What if we tried a 30-minute time frame? Here we are. 30 minutes. Okay, 30 minutes, not bad. $3,000. What does that mean? How long is a 30-minute run? A year and a half. $3,000 in a year and a half. That's not bad. That's reasonable. But let's keep going. Let's see if we can get better. "15 minutes. What's this? We're losing money. How can that be? If the trend is showing the direction, and this is roughly half a year, why are we losing money?" Because that's exactly where the bear market started. The trend that this is showing is now afflicted by the bear market directly. So let's show what a short-term short looks like. Okay, so if we shorted the market starting in November, we would have made $436 over the course of the last half year. Reasonable, beneficial, but how do you know when a bear market's going to start? Do you run both the long and the short at the same time and simply take the difference between the two? You could, but you're going to still lose money. You only made $436 here. Whereas if you had a long position running to hedge against the market, this is a $1,000 loss. You would have had a total combined loss of $600 trying to manage both at once. And let's look at this, because it's more than just a trend being wrong or not being in your favor. One of the biggest things you see at smaller time frames is that the trend itself begins to break down because of the spread between the bid and the ask of the exchange, the actual price action differences, and most importantly, the fees that you pay. Your fees are your biggest detriment when it comes to trend following. If you had no fees whatsoever, look at the difference. That's quite substantial. And look at the difference here. $700 versus $1,000 with fees. Think about that. This would have cost you $300 in fees. So here you have $733 versus $738. This would have been a combined profit of $5 without your fees. But because of fees, you not only lose on the long side of $300, you lose on the short side of $300. So in essence, you're spending $600 total in fees. And that is what destroys the shorter time frame trends. The amount that you pay in fees, even though you only have 75 trades. That doesn't sound like much at 0.2%. But as you can see from the actual numbers, that is $300 off of your profit. So if you don't pay any fees whatsoever, you can set this up for the long, set up another sub account for the short, and come out smelling like a rose no matter which way the market goes. But 98% of us don't get that luxury. We have to pick a direction and stay with it and hope for the best, because we can't afford to play both ends of the candle at once and hoping we don't get burnt in the middle. The average retail investor is going to get burnt in the middle trying this approach. And they're going to lose on both sides. But we're not done yet. Let's look at this chart some more. We see what looks like trends. For example, this looks like an upward trend. This looks like a downward trend. And this looks like a sideways trend. But we can't really call them trends because they don't compensate for the fees. The best we could say about these market conditions is it's an upward momentum. The market is moving upward, but it's not trending enough for us to profit from it. Even though the long term of the last 8 months is a downtrending market, these shorter little upward swings aren't trends. They're too narrow to be called trends. So they have to be considered what they truly are: temporary momentum changes. So in this case, what looks like a trend because of your fees isn't. And in fact, in this case, it isn't even a fair weather friend. Your trend hunting approach just cost you $600 going from both directions because of fees. And that's the whole point of why trend breaks down on lower time frames. Realistically, there is no definable, legitimate trend at the smaller time frames because there's not enough distance in price action from the beginning point to the ending point. Because one of the biggest problems you have with a trend is that once you realize that you have a trend, there's a good chance it's at least 25% over. It gets worse the lower we go. Let's go to the 5-minute. Let's bring up the statistics. And here you see it just did poor altogether. Huge losses. Now again, this is within the last 8 months. So let's see what happens if, we are shorting the market. So even in a short, we're losing money. The long is worse. And the only difference is our fees. 0.2%, and yet we lost both directions. Now let's not pay any fees at all. Okay, we lose on a long. We win on the short. But again, how many people don't pay fees? When you look at the YouTube channels of all these award-winning strategies for any market condition, that's the point. They don't take fees in. That's how they can pass off their snake oil and how they get people to follow them. They lie. You can't trade on the market on 98% of all exchanges and conditions without counting your fees. You have to take into account your trading fees. even if you have an insanely low trading fee, it still has an impact. You have to look at your trading fees. Now, is this worth it for the short term of, say, 30 days? $44 in 30 days for a $100,000 budget. Maybe it is. But again, look at the commission. Look at the reasonability of what you pay for your fees. Realistically, for most people, for me, no. My fees, my round trip, one purchase, one trade, right here. I'm losing money here. Let's go to Coinbase. Coinbase is roughly 0.5% minimum. Okay, it just gets worse. Let's go to Coinbase full round trip. And it's getting even worse. This is why trend is a deception. Because you have to consider all of the circumstances. It's not just the short-term consequence of the market. It's the bigger picture of the market. It's the amount of fees you pay for each transaction. All of that takes into account the reality of what the market is and the reality of the difference between what defines a trend versus an upward or downward momentum for a smaller time frame. Trends are just that, trend. You have a history over a prolonged period of time. Momentum is both short-term and long-term, but momentum can change at a split second, which is why when you look at the lower time frames, they look so chaotic, because momentum isn't needed to be more than 5 or 10 minutes. So an RSI momentum might only be for that one candle, whereas a trend is going to need at least 2 or 3 days to form. The trend is not always your friend. And a good portion of the time, the trend isn't even there. Hopefully, I've been able to demonstrate this concept with real numbers to help you see the importance of just how to look for and consider trend trading. Trend trading is a wonderful asset. It is very lucrative when you are looking at something that's going to carry you over the course of a year, 2 years, 3 years for something you believe in. Whether it's a stock, whether it's a Forex pair, it doesn't matter. If you're following trend trading, it's one of the easiest approaches to do. Something along the lines of the 4-hour time frame, you can even do this manually and have good, reasonable results, as long as you stay with it and stay consistent. Trend trading is not something you can pick up this month and put down next month and change the approach. Trend trading is long-term commitment, long-term focus on the bigger picture. In this case, 5 years worth of history. And those 5 years of history have a total profit of almost $13,000. That is reasonably good for the process, especially considering the market we've had. That is incredibly good. So as you work through the approach you want to use, don't just look at the long range only and think it's going to work on the 5-minute time frame. And don't just look at the 5-minute time frame and think it's going to work for a year. You have to take a look at the bigger picture, not just 10 trades from now, but think about it 100 trades from now, 1,000 trades from now. The biggest failure I see is traders don't stick with what they have chosen. While it becomes necessary sometimes to rethink your process, sometimes you can overthink the process and cause more damage than just letting the market run its course. Something like this, which is a market following approach, once you set it up, you simply leave it alone. You watch it, you maintain your alerts, but you leave it alone and let it function year over year for your asset. Most importantly, you pick an asset that you believe is going to last year over year. Binance Coin is a good asset because it has a utilitarian purpose. It's supported by the exchange itself. Every user on Binance uses this asset, so it has a long-term history. If this asset fails, chances are the exchange is going to fail. So it is really the perfect asset for this type of long-term thinking. Even if you don't want to wait 5 years, going through and picking time frames that will give you a year, 2 years, or even 3 years is reasonable enough to stay within the conjunction of a profitable setup. That is, in all honesty, the whole approach. As you can see, this particular situation, not profitable. It's a long situation, 29 minutes. But yet, let's go to a proper 30-minute. And it becomes profitable. Who would have thought a 1 minute difference in time frame would mean the world? But it does in a true trend. Trends are very sensitive. That is the whole point. The sensitivity of the trend is critical. Your analysis of the trend is critical. Understanding whether or not you have a trend is critical. Momentum is not trend. Momentum may help you find the trend, but it and of itself is not the trend. Hopefully this has helped you see the difference between long-term trading, short-term trading, and specifically how to trend trade. You don't need a lot, but you do need to understand the very simple basics. If you have any questions, please let me know. Leave them in the comments below. I do read and I do answer these comments quite aggressively. So, happy trend following. And if you like this video, please give it a like. If you're not subscribed, please subscribe to the channel. This way, it helps me know that this kind of content is helping people. Until next time.